Welcome to Markets Now. I'm Michelle Rook with Scott Varilek, Kooima Kooima Varilek. We started off with just about all of the grain and livestock futures lower. Right now, the one exception is we do have live cattle futures, which are trying to come back. And Scott, probably a good place to start here. We're finally holding, and that's some good news here because after yesterday's chart action, I know you were a little bit worried, weren't you?
Yeah, and thanks for having me. But they're trading pretty good today. We're fighting off some of the break yesterday. I mean, that they had me a little nervous. I mean, there's a couple of reasons. We've got a seasonal market that can put in a top about this time of year, and you had a Packer playing hardball with some cash bids and had some lower bids to start the week. We were able to fight off some of that news and turn this market back higher again today. So we filled two different gaps on the June cattle there yesterday, and then that's where you fail from a couple days ago, filling the gap, I guess. But it just has some alarms going off in your head, so you're hoping they recover. And yet again, we're fighting it off. This market has proved itself to be pretty resilient. Every time it has its triple-digit lower day, we're finding buyers were moving higher, and we still have our fundamental news to kind of lean back and stand back on.
Right. So let's talk about the cash trade, 182 in the South yesterday, so $2 lower. We didn't have a good test in the North necessarily, but you say actually you think maybe this is a little better than expected and we're going to continue to do a little bit better as we go through the end of the week.
Yeah, that's what it's got to feel. I mean, the early bids is to start the week were lower, and it was some low 280s for meat bids and the 178 live bids, and I think everybody was getting a little nervous and not ready to cave in just yet. There might have been just a couple hundred head here or there that did slip, but we were able to get some higher prices yesterday. We got up to 180 in the south, and also getting some of that kind of trade in the north, getting some 287 in the meat plus the grid kind of trade. So a lot better than what was earlier anticipated, and seeing several of the Packers play. That's another key sign that you've got some of the majors in there leading some of this charge. And for me, it's okay. We've got tight numbers. Yes, we've heard about the Packers are slowing the chain a little bit, trying to curb some of this higher cash price, but I just don't think that the cattle are overrun with numbers. I think our show lists are so manageable that they don't want to make a charge at the cash, because I think the cash would get away on them. If they raised their bids and had a higher price to go try to buy more cattle and try to go against their competitors, I just don't think they're going to find a large number of cattle to chase after. So they'd rather just kind of sit on their hands as long as they can, get them as they come, and trying to keep that chain reined in a little bit on this cash price, because I think it could get away from them. And you've got this maybe slower demand time frame right now. We're coming into the grilling season and our peak demand, so that's our chance. You can get your seasonal cash highs in second and third week of March. So for me, I still think that the producer has a lot of leverage. We're slowly learning that. We've had it for the last couple of weeks. The longer you wait into the week, the better cash you get. And I still think we've got a little bit of that setup happening right here.
Yeah. I was going to ask you about the kills, because for the week we're down here compared to last week and last year. And obviously Packers are going to try to do that, force their hand. The feeder market, feeder cattle prices, the futures as we talk are pushing back to the plus side here. Boy, what are you thinking there? We got to watch these break evens because these replacements are getting pretty expensive, aren't they?
Yeah, that's for sure. And the feeders are the leaders. That's been what we've
That's
been
good.
talking about, the smaller cow herd since 1951. We've heard all of those numbers, but the cash feeder prices are showing us how tight these numbers really are, and like what we see there. We need that leadership to happen, but as you alluded to, that puts a lot of risk on our plate. So we can be our own worst enemy in the feed yard, paying too much for feeders. And you buy your feeder calves and they don't generally just break even, where you can say, hey, I want to buy some feeder calves and lock in $100 a head. That's not how this business works. We need that rally to get these to work. And we've been on a rally, but it's still, I can be as bullish as the next guy and say how tight numbers we are, but it doesn't mean I can just, buy those kind of feeders, put that kind of a dollar risk out there and not do anything about it. So, I mean, we all know that the rug can be jerked. We can have some reasons to break this market. So I just don't want to just go unprotected, especially where the calendar lines up. Hey, we can put in some highs right here. So I'm going to be looking for some kind of protection here just because I have too much risk on the plate there.
And hogs have turned mixed here since we started on the lower opening. We didn't see much follow through initially after that big update yesterday. And we talked about Bill Sack talking about a Prop 12 ban as being part of it, but also strong exports. And we certainly got confirmation of that this morning, didn't we, with 73,000 metric or 72,000 metric tons.
Yeah, we sure did. That's a big shot in the arm, and that's going to be one of the reasons we had the big update yesterday. The strong exports is what's needed when we had such a large supply to go through. So that's absolutely what that market needed, and in a big number. That's a big number posted this morning. So yesterday was penciling some of that in, and now today is the confirmation that yep, it indeed happened. We do have it. So still can fall back on that for the future here, saying okay, seeing if those numbers can stay propped up or not. And we do have weights coming down a little bit, so that's going to help. And then the other story yesterday was Prop 12 kind of entering into the news a little bit again, as Secretary Vilsack is bringing it up and just talking about the risks of how it could really affect our food supply chain. So I don't know if that news was necessarily that we need to go triple digits higher yet, but it's at least back into the light, and maybe getting the kind of news that we feel like it should get, that hey, this could be a problem and something that might need to be fixed. So we'll keep our ears to the ground to see if that's something or there's going to be any change there.
Yeah. Like I said, interesting though. Futures now at a premium with February going off the board. April is like at a $10 premium to the index, but we got a lot of time there, don't we?
Yeah, there's a lot of time. It felt like April did not need to be the leader off of some of this news, and
Yeah.
especially the Prop 12. But yeah, exports, that's
Right.
sure
That's
going
the
to
summer
help.
play, right?
Yeah. So, but April got ahead of itself a little bit. It was kind of my feeling yesterday that it was going to be, that much stronger than the rest of the contracts, rather than, looking out into the future months. So that was a little tricky for me. That April did it. There is, quite a bit of put volume with the LRPs at some of these levels here. It was just kind of ironic how Feb really closed the gap at the end against some of those LRP prices, and now
Right.
April's kind of doing the same and getting back into those levels because there's large amounts of volume where some of those puts and LRPs line up. So it could be also some of that there's just a little bit of defense protection kind of happening, how those can kind of magically line up just a little bit towards the end and narrow that gap somewhat. So I do have a little bit of feeling that some of that is happening.
Grains, more new lows here this morning. We're coming off our lows, at least in soybeans, but still, like I said, new contract lows in corn, and the Ag Outlook forum seem to be part of the reason. Oh, we've got these numbers out of the way. Do you think we can start trying to base or find a bottom here or not?
It's been tough sledding, obviously, and we're all looking for that new story. What can we shift to on these grains? What's the next talk? Well, unfortunately, the next story that we come up on is okay, we need to start calculating our acres and putting some yield and throwing some ending stocks numbers at it, and those look pretty big. We're going to increase that ending stock number, and the corn is kind of projected. That 2.5 million bushel was the number that came out as the first estimate that we kind of see for the year, and that's probably not out of line. We know that we're going to see a shift from corn to the bean acres, would be my anticipation, that we're going to pull those
Yep.
acres back and slipping some into soybeans, maybe at some other crop as well. But the every check engine light is on my dashboard still here on these grains, and it looks to be tough sledding, and it's not going to just turn around overnight. We're not going to get that story that's just going to shoot us out of here, because it just proves day and day again that it can grind lower and slowly grind into more lows. So I think maybe some producers have realized too late that this market's in trouble. So yes, on the old crop, yep, maybe that ship has sailed a little bit. We know what's happening. We know we got a lot of grain, but turn to your new crop. Start looking for some different ideas on putting a floor or protecting something back there, because you're going to get below cost of production on some of these grains. And yep, the market can do that. It sure can. Even though your cost of production is up here, that market can grind lower. So still pretty nervous about the grains and the downside there.
Yeah, and soybeans are trying to come back as you and I talk here, and we had exports out this morning. Certainly those weren't great for wheat or soybeans, maybe a little bit better for corn, but you got to feel like the most bearish news is kind of starting to be worked into this market, isn't it?
And that's a good point, because we're already planning this next crop and saying, yep, it's going to be good. There's not going to be any problems. We know there's going to be weather concerns, and we're going to have to trade some of those markets there. But we've certainly thrown a lot of the bad news at this market,
Absolutely.
and I do think producers have realized it and started to dump some of this old crop corn and soybeans. You've got interest rates that are high, so it's maybe a little easier for you to think about doing it and trying to get some of that cash now. So we could be, slowly getting through it, but until I see some better confirmation than grinding into new lows every day, I'm not going to believe that we can turn this around real quick.
And you're at home getting ready for the sale, the annual sale, right?
Yeah, annual sale, 72nd annual for my family. So we got our bull sale Saturday, Feb 17th. So excited for that. Another year. Prices look good, and I'm really looking forward to it.
All right. Well, thanks for joining us there from the ranch. Appreciate it. Scott Varlick with Kooima Kooima Varilek. That is Markets Now.